For Indian banks, the Q1 results have been heartening, to say the least. State-run and private banks posted a combined net profit of Rs 73,393 crore in the first quarter of FY24. This was a rise of 68.8% year-on-year, with a cumulative operating profit of Rs 1,30,716 crore, up 42.8%. State-run banks' net profit more than doubled. It increased by 124.8% on a year-on-year basis to Rs 34,418 crore. For private banks, it went up by 37% year-on-year to Rs 37,683 crore.
I think broadly what we've seen is growth is very good, and asset quality is also holding up nicely. The misses are primarily around margins. So margins have declined. They went up last year. So we are seeing some give back of those exceptionally high numbers. And broadly, operating costs across banks, especially private banks, have been higher, especially, attrition rates have also gone up. So broadly, you can say positive is growth and asset quality, negative is the margin and the OPEX. Return on equity, which is, I think, a key measure of banks' profitability, we are seeing broadly hold up to what you would think that these banks would earn on a through cycle basis. So earnings are, let's say, at normalized levels. We are not seeing any upgrades in earnings. So upgrades are very hard to come by, but and in some cases there have been downgrades. So from a stock price perspective, what matters is essentially then the valuation. Whether these valuations can go up or not, which given the rate cycle right now will be hard to argue. So you will basically get compounding. So book value growth, earnings growth is what investors can basically get. Very hard to argue that re-rating will happen on valuations or earnings will get upgraded from here on. So that's broadly, I think, what the first quarter trend shows.
The sterling performance of both categories of banks is on the back of healthy growth in their net interest income or NII and strong credit offtake. In the case of state-run banks, the robust growth in other income and fall in provisions aided in reporting a healthy bottom line according to analysis-based data compiled by BS Research Bureau. The State Bank of India accounted for almost half of the net profit of state-run banks during the period. That said, on a sequential basis, the net profit of state-run banks saw a 0.2% drop from Rs 34,483 crore, with both NII and other income down 0.8% and 17.6% respectively. Private banks saw their NII rise 26.4% YOY to Rs 80,404 crore, reflecting the spike in lending rates. Other income like fees, commissions and revenues grew 39.4% YOY to Rs 29,653 crore in Q1 FY24.
So basically, quarter 4 FY23 depicts a mixed results overall. In terms of key trends, we believe that the margins have already peaked out in quarter 4 FY23. So we were expecting around 10 to 20 basis points NIM compression in quarter 1 FY24, which was in line. In case of private banks, the NIM's compression was in line with their expectation. However, the negative surprise came from PSU banks back, where we were building our NIM compression of around 10 to 15 basis points versus which came in around more than 20 basis points in terms of NIM's compression. So basically, in terms of key positives, loan growth continues to remain strong, and it was broad based. And in terms of retail deposit growth was also strong and that picked up substantially, which has been led by the term deposits. If you look at the credit cost, also the credit cost was marginally higher, but although it was lower because due to the quarter 1 is basically seasonally a weak quarter in terms of because there are slippages from the agri portfolio and recoveries are also lower in quarter 1.
In a review, India Ratings said in the current tightening cycle, that is between May 2022 and June 2023, state-run banks have been active in rate transmission on fresh loans while private banks have lagged behind. State-run banks have upped rates by 173 basis points, while private banks have upped by 146 basis points. For outstanding loans, the pace of transmission was lower at 96 basis points for state-run banks compared to 105 basis points for private banks. Banks seem to set hold the trajectory mentioned in the Financial Stability Report of June 2023. It had been said that in FY23, banks' net interest margins improved by 30 basis points. Banks' profit after tax recorded a healthy growth of 38.4% year-on-year during FY23, led by a strong increase in net interest income and lowering of provisions. With the interest plot also likely to change dramatically from here on and relatively better credit offtake, banks will continue to be in a sweet spot.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.